Well, folks, the good
The
old
House of Pain.
might be upon us. Why? Because of a stupid cargo ship getting stuck in a canal. Why would I be so pissed off about it? Because what have we been talking about on this channel? We've been talking about, well, obviously the market's going nuts. This massive fear over, oh no, bond yields have gone up. Short-term increase in the bond yields means maybe inflation's coming and we should just sell everything and rotate over to recovery stocks or just out of everything because, inflation's coming. We all think, or at least I certainly think, it's a bunch of fugazi, whatever, that this long-term inflation is coming. I don't think it is. In fact, I think over the next inflation readings, we'll continue to have lower and lower readings. In fact, guess what came in today? The personal consumption expenditures reading, and it came in 0.1% lower than expected for inflation, and this is the data that the Fed uses. We like to hear of CPI, the Consumer Price Index. Well, this is the Personnel Consumption Expenditures Index. It's kind of the same thing. Basically, it came in lower than expected month over month, which is good. This is kind of what we're expecting. In fact, the next CPI data release comes out here on, it looks like, April 13th at 8:30 a.m. And we're looking forward to that CPI data coming in lower month over month to show, like, hey, month over month, we're not seeing inflation, nothing to be worried about. Now, we know that the CPI doesn't account for everything. We know that there are a lot of hidden forms of inflation, like obviously look at asset prices, stocks, real estate, lumber. There are lots of things that are going up through the moon, but a lot of these things have to do with supply chain issues. And guess what just got a whole lot more freaking bad? Folks, supply chain issues. Why? Because there's a freaking ship stuck in the Suez Canal doing nothing because its bow is stuck 30 feet under the floor of the canal and it can't move. And now they're talking about maybe this will take like 10 days to move. This is much more of a crisis the longer this goes on than it appears. Why? Because guess what happens? It's not just that frickin' ship. It's all of the other ones that can't use the canal. If you can't use that canal to go from the Red Sea to the Mediterranean Sea, you can't get goods and supplies from India and China through the Middle East and up the Mediterranean into Europe and then wherever on from there. You can't. You gotta literally go around Africa. And you gotta go all the way around. I mean, they see an ad somewhere around 6,000 miles to the trip, and it already takes forever for these container ships to get around. They're not exactly the fastest things. I mean, I think they drive at like 14 knots, which 6,000 miles adds a lot of time. Let's just do the math really quick here. You get 6,000 miles divided by 14, and that might even be generous. That's 428 hours divided by 24 hours in a day. Huh. You just added 18 days. You just added 3 weeks to your commute time to some of these products. That's kooky crazy. Because guess what's not just on this kind of ship, but the other ships? Well, food, certainly like commodities, like coffee. No, not like fresh stuff, obviously. But food, commodities, iron ore, chips, computer parts, things that we need right now. Things that the world is like, yo, we need more of. Please, we want to buy more because real estate prices are so high. Computer, we want more computers. We want to invest. Let's buy stuff. Let's get a new gaming computer. Or let's buy more or mine more Bitcoin or Ethereum or whatever, right? Or build more cars. I mean, look at NIO shutting down their facility for 5 days because they can't get their hands on enough chips. And they're in Semiconductorville. Imagine how the rest of the world feels when all of a sudden you get supply chains. Oh, sorry, add 3 weeks to your commute there. Yeah, oops. So, why is this potentially really bad? So, my expectation here has been that we're going to see lower month-over-month inflation data. That's going to come, though, despite the fact that we're going to see larger, substantially higher year-over-year inflation data. That's because we were in a pit in the pandemic in March. So it makes sense. Year over year, it's gonna look rough, And I kind of wrote down over here that I wouldn't be surprised if year over year our inflation comes in around 2.4% for March, around 3.5 to 3.3% in April and May, and then we go back down. Those are kind of the numbers that I'm working with in my projections. They're gonna be bad year over year, but we don't really care. I mean, we shouldn't really care about that number. Some people are gonna be freaked out because the media is gonna be, oh my God, inflation 3%. But the big thing is going to be that month-over-month data. Well, guess what all this crap here with the Suez Canal could do? It could literally jack up inflation because not only is freight going to get more expensive, but everything's going to get delayed, which means people who want their stuff sooner are potentially going to be willing to pay a premium for it. If those prices get passed on to the consumer, which they very likely will, guess where they'll show up? Consumer Price Index. Yes, we could literally see bad inflation for March because of this crap, because a ship got stuck. Oh my gosh, like what were they doing? So this creates a giant cluster of problems because now you have hedgies and the funds, the suits, going, okay, cool, we did our rotation for the quarter. Great, you know, we're quarter's coming to a close. This is our last Friday of the quarter. All right, are we good? We rotate enough? Now you get this problem coming up. It's possible that hedgies and suits could get even more defensive and try to get out of higher multiple stocks even more Monday, Tuesday, Wednesday of next week. Now, I hope not. You know, I'm looking for good catalysts here. The problem is all we have right now is a bad catalyst. And that catalyst literally screams, I'm causing inflation. Like every time you see a picture of that ship on a newspaper, just think inflation. Now, that's bad, obviously, right? That's bad. And there's no good news about that. Now, is that, I gotta ask you, okay, is that long-term inflation or is it short-term inflation? We talk about this all the time on the channel. Obviously, it's short-term, right? Supply chain constraints are short-term issues in the stock market, which means you have to bear through the house of pain that much longer, which means if you need basically what's now a mental health support group for your stocks and the psychology of money, make sure you take advantage of that 38% off coupon code expiring today so you too can get support. But anyway, obviously, every single day we have a live stream where we talk, and it's not just a support group. But the point here is, folks, that ship could very likely, unless this gets broken free this weekend, could very likely cause a spike in inflation on a month-to-month basis. That could potentially lead the bond market to freak out again, sell off on the bonds, sends yields up. Yields go up. If they go up too quickly, then the stock market's like, whoa, that was too quick of a jolt. You know, the acceleration of rates going up. I made an analogy earlier on the live stream. It's kind of like imagine you're driving a car, you're going 65 miles an hour. You know, if somebody slowly steps on the gas a little bit and you get from 65 miles an hour to 80 miles an hour and you're in the back seat, you don't really notice. You don't notice the creep of bond yields potentially, right? But if you're at 65 miles an hour and somebody's in a P100 Model X and they floor it and you zip up to 90 or even 80, but you just do so very quickly, you notice because you're like, whoa! Yeah. The same thing that has happened could potentially continue with this kind of news. Like, I was literally hoping for, hey, that's fine. We got no news. It's fine. Things will settle down. People get over this whole, bond yield started going up. Big deal. It was bound to happen anyway. It's something you could have easily seen coming. Not a big deal, but it came a little too fast. And it's been pretty volatile. And now we got a ship stuck in the... This is... You can't make this stuff up. You can't make this stuff up. So what are we thinking? What's the bottom line? Well, the bottom line is you got to be prepared. This is, even though as fun it is to buy the dip, and as fun as it is for me to go, yay, we just put 500K into a big buy the dip stock that I'm excited about. I have high conviction in. Maybe we'll do it again. I don't know. We'll see. We also, at the same time, got to be a little careful because, and I know this kind of sounds like contradictory. It's like, how could you be careful if you just invested this and gave everybody your high conviction report in the course? Link down below. Like, how does that make sense? Well, I might have pretty high conviction that we are not going to see long run inflation and that we are going to W-shape a recovery out of this. But I also could not have predicted a stupid ship getting stuck in a canal, causing potentially inflation fears to ramp up. I think all of this will clear. I really believe that once we get out of this crappy March month, we get out of quarterly rebalancing, we finally realize that no worries, like things can be okay as bonds recover. All is going to be okay. That's one of the reasons I keep investing. I'm not panic selling. I have not sold anything since February 16th. And trust me, everybody who's buying the dip gets that feeling of like, whew, oh, it just keeps dipping. Oh, it's like I'm putting money in the fire pit. It just keeps going. Yeah, I know. I hear you. Stay strong. And stay true to what you believe will matter 10 years from now. Ask yourself, how old are you now? Whatever how old you are right now, add 30 years to it. Do you think we're going to look back and go, oh, I remember all that hyperinflation we saw in 2021? No. No. It's all going to be fine. Problem is, right now it doesn't feel fine because the Weenie Babies are all rotating out of stuff that matters. But not only are the Weenie Babies rotating out of stuff because they can't handle it, but they're also exacerbating the problem. Setting stop losses, trying to sell at the bottom. These are a bunch of paper hander bears. It's bad. Bad. True hodlers make money through these times. This is when the money is made, when there's pain. What do people always say? Be fearful when people are greedy, and be greedy when people are fearful. What do you think people are right now? They're fearful. Okay, so deduce. And remember, very, very, very important. When prices go down, you are de-risking. You're taking risk out of the balloon, so to speak. You know, a really inflated balloon is very fragile, very likely to. Whereas a balloon that's only like if you had a normal balloon that was like this, and the balloon's kind of like this, it's like really soft and spongy, and you can kind of like, boom, you know, hit your face on it or whatever, punch it if you want. It holds up a little more. Now, it's not going to say we're not going to see further declines because of this stupid ship thing here. If it weren't for this ship, I'd be a lot more optimistic. But, you know, I want to believe that our W is going to occur. We're going to see a recovery over the next few weeks. Usually these corrections last about 6 weeks. We just finished, this is week 5. We just finished week 5. So potentially we could see some more volatility next week, especially because of the ship on top of that. But buckle up, stay strong, and folks, we're gonna get to the other end of this, all right? Thank you so much for watching. Use that coupon code down below, and folks, we'll see you in the next one.